Good morning or good afternoon now, everybody. My name is Madeline Boys, and it's my absolute pleasure to be back at the European Blockchain Convention today and to be moderating this fantastic panel on how to increase transparency in the digital asset ecosystem. So we don't have a huge amount of time, so I want to kick right off and ask the panelists to introduce themselves. Waqar, if we could start with you, please.
Hi everyone, really nice to be here. I look after the innovation and digital asset products for Standard Chartered Bank Financing and Security Services. I'm across all the group entities based out of the UK. Really good to be here.
Hi, my name is Denis and Stephan. I'm the product owner of DTI in Digital Token Identifier Foundation. Our role really is to issue ISO standard identifiers for all the fungible digital tokens.
Hi, good afternoon, everybody. Stefan Dreyer, Managing Director at the Association of National Numbering Agencies, or ANA. So we are a global member association, trade association for financial reference data standards, identification standards. We have 120 members globally, representing key market infrastructures such as stock exchanges, central securities depositories, central banks, regulators, and data vendors.
Thank you. Very diverse panel, I think, which is lovely for the topic that we have here today. So I want to kick right off and Waqar, lean into your institutional perspective a little bit here and ask you to give your view for the audience's benefit on why transparency is so critical to the development and particularly the growth of this space.
It's a question that we've been talking about for the past few years. It's constant, right? So talking about crypto side, for example, it's an asset class which is transportable globally. But once you start integrating a crypto infrastructure into traditional financial products, those products need to be integrated within existing financial institution systems. To be able to do that, you need to be able to identify it, track it, be able to value it, etc. Right? So some of the constructs around crypto assets make it easier to do, but when you start talking about tokenized real-world assets, and these are coming out of various technical experiments within a consortium of banks, asset managers, the need for those assets to be transportable from one entity to the next is quite important. For that to be enabled, you need to be able to identify it, you need to be able to track it after it's been identified, and you need to be able to value it. For an entity like us, primary business of my area of concern is custody. So when we custody an asset, we need to be able to track it end to end, and with blockchain comes the additional benefit and the burden of finding out the whole transparency behind the asset. So we can see from the genesis all the way to where it's landed. So to be able to identify entities as well as the asset from start to finish and making sure that we have the right asset from the right place and for the right client, it becomes paramount. With open blockchain standards, it's difficult to ascertain because everything is pseudonymous. You can't really identify people or identity. But to be able to get to a point where we understand where it came from, where it's going to go to, and uniquely identify each asset class is going to be quite important for us.
Yeah, I can imagine. I mean, that's a theme that came up very much so in the last panel as well, when they were talking about digital securities, the digital securities piece, but then also the cash leg to sit hand in hand and here to the similar analog, having the existing infrastructure, existing assets, and the tokenized piece that's sitting on the side of that. They need to work together in tandem, which I think is going to be a theme throughout the panel. So just give us a second to get there. But before we move on, Denis and Stephan, was there anything that you wanted to add to that?
I think, like Waqar said, it's the identification of the asset is probably a first step of setting up any standards. Before you kind of start classifying it or settling it or put it in custody, you need to know exactly what that instrument is, and the identifiers we have in the crypto world right now, like BTC or ETH or any of those are just tickers that somebody came up with. They're not unique. Anybody can create a token on any blockchain with the same three letter code. So what we do with the DTI, is that me? What we do with DTI is that it's identifies the asset uniquely based on the underlying technical information of that token. So I think once that's done, then you can start building on top of that other standards around what is it in terms of, is it stable coin, is it asset-based token, and then build on top of that, the standards around smart contracts. But you need kind of that first step done first.
Yeah, so I would agree. And I think this identification of what it is that we're talking about is integral to the way that firms work in the capital markets. So it goes through all of the various different processes, from your basic data management, back office, risk management, really understanding where your exposure is. That identification feeds the transparency, which then further feeds the trust issue. So trust was spoken about in the previous panel quite a bit. How do we get investors to understand and trust in these kind of new assets, these tokens, and what does it actually mean? So identification as a first step, and we'll talk a little bit more, hopefully, in the panel about some of the work still to be done in terms of standardization.
Yeah, absolutely. And I love you bringing up the theme of digital trust, because I think it's absolutely a pillar to the conversation today. But we talked just now about why it's so important, but as the industry is developing, a lot of technology is being built. What are the challenges that we're still facing at the moment to enabling that transparency and fostering that trust with consumers and the wider industry? So, Stephan, maybe you want to carry on that train of thought?
Yeah. So I can maybe reflect a little bit on what Anna has done. So the previous panel, they talked a lot about the digital security tokens. And for us, it was really a question of understanding, starting out, coming from a traditional finance, where we're sitting here looking at bonds and shares and funds. We knew what those were. Our national numbering agencies were assigning the international securities identification number to them. And then the question came up, what does this DLT mean? What is a digital asset? What's the difference between a digital asset and a crypto asset? So all of these kind of questions coming and trying to really understand that. And so we came to some conclusions that what something is, so these traditional assets, the fact that you have some application of DLT or blockchain for the issuance of that doesn't inherently change the nature of what those things are. But people don't necessarily understand that, because it gets lumped in this kind of big digital asset, crypto asset, and it's hard then to distinguish. So we see two activities. We see that sort of tokenization aspect, but then we see the emergence of a new asset class. So the stable coins, the cryptocurrencies, and what does that actually mean? Those things that are native to a ledger. So the identification, I think, is one aspect, and we've taken that and we're looking to expand the scope of what we do with the ISIN identifier to include this new asset class. So Bitcoin getting an ISIN is something that we've heard a lot about, and the whole family of other tokens. But also understanding and acknowledging that the existing standards, even though they must evolve as the industry evolves, don't necessarily fulfill all the functions. So they're fit for purpose, but there are additional needs with the technology, and that's where kind of our collaboration with the DTI comes in.
Do you want to jump in with the DTI's perspective here? I think it would be quite fitting.
Yeah, sure. So DTI, DTI and ISIN are two separate standards, but they kind of fit together. So where DTI comes in is it captures the technical implementation details of the token to uniquely identify that particular token. So taking an example of something like Tether, it's one asset, this Tether stablecoin, but it's created on at least a dozen different blockchains. So from the DTI perspective, that's 12 different identifiers. We can then group them together and assign one ISIN, because that's at the asset level, it is one asset, but at the underlying kind of token level, it's multiple tokens. So I think that's where the sort of the complementary side of two standards come in.
Yeah, and we'll go into more depth around that a little bit later. But Waqar, just before we move on, is there anything that you wanted to close off on the challenges of building transparency
Yeah, so I mean, for us, it's going to be a game changer. I mean, people may not see standards as something that is an absolute killer need in the market at the moment, but I'll tell you something very unique about these assets vis-a-vis what we do as a custodian and what it needs to have a really scalable network globally. So when you start talking about hundreds and thousands of assets being tokenized and millions of transactions going around, using smart contract technology, automatically identifying what the DVP, the P leg is versus the delivery side, having standardized nomenclature for the security or the asset with the P side where the payment comes from is going to be absolutely paramount. Without that, no financial system will be able to scale these things. To be able to develop standards like these guys are developing at the moment is actually right at the center of the scalability that we're talking about. And the adoption that the previous panel was talking about is not going to go anywhere until we understand how do we define these things and how do we connect the interconnected nature of financial assets.
So, to use the previous panel's analogy about the bouncer at the entrance of the disco club, you have standards on one hand and regulation on the other, which is music to my ears working for a trade association that aims to promote best practice standards for digital assets. But we're very lucky to have here today, amongst our panelists, examples of industry collaboration that are coming together to actually build these fit-for-purpose standards for the ecosystem that we're talking about. So, Denis and Stephan, if I can ask you to talk a little bit more about the collaboration. You gave a fantastic introduction, but walk us through the process behind which you ensure that existing identifiers are compatible with new identifiers as they're being built, and what is the, beyond what the value proposition is, what is the added layer of value that DTI brings to ISIN models already?
Okay. So the DTI standard was published two years ago in September 21, and we at the same time set up a task force with Anna to see how the two standards, the traditional ISIN and DTI, how they can be how we can work together to make sure that we make them complementary. So that was our task force been running for 2 years, and recently we issued some findings, and one of them, like Stephan mentioned, was that some of the crypto tokens will get their own ISIN, which are driven kind of in a different way from DTI, in a different way, like a traditional ISIN issuance, where the there's a prospectus and the user coming in. From the DTI perspective, it's does the token exist? If it exists, what is the asset? And then we can review if that asset gets an ISIN. But it's one of the findings or one of the conclusions of the task force, and I think there'll be more to come as we continue working.
I think it's important to highlight that we as organizations are not just developing these standards in isolation. So the standards that we refer to are part of the International Organization for Standards, or ISO. And there's a specific governance framework that you have there, and you have many countries with their national standards bodies sending experts to these working groups and committees to develop these things. So you have blockchain experts, you have financial industry experts, and then you have those organizations which are responsible for helping to develop, to implement and maintain those standards, such as ANA for the ISIN standard. We are the registration authority. You have DTI DTI Foundation for the DTI standard. And so we saw a real opportunity to work together. The DTI had been developed for a very specific purpose with the growing significance of digital tokens. ISIN was there for really about the unique identification of financial and referential instruments. But as these two worlds are merging, it was important to understand how these standards can be complementary and not competitive. And nobody wants to, when you're maintaining standards, replicate efforts, right? So it was about having a dialogue, understanding, and we were part of the development process of the DTI standard. So understanding, what would be included in terms of reference data in terms of DTI that would complement what reference data was available with an ISIN. And the ISIN is a good transporter of other standards. Many people may not know, but within the reference data set of an ISIN, you've got multiple other ISO identifiers, such as the classification of financial instruments, which in the EU is a requirement for regulatory reporting. You have the financial instrument short name. You have the MIC code, which is the exchange or the market on which the asset is traded, and you have the legal entity identifier. So it seemed a natural conclusion to find ways to, in the development of the DTI standard, include that in there. So Denis touched on it. You have the ISIN, which is there telling you what is the asset. You know, it's Apple stock, it's the EIB bond, it's Bitcoin or some other stable coin. And then at a high level, understanding that any asset could have multiple implementations on different networks and different protocols. And that's where then the DTI comes in to complement that. So we've tried to develop this in such a way that it is also interoperable. So if you have an ISIN, in that record you have the DTI. In the DTI record you can refer back to the ISIN, hoping that that will be useful in the processes that institutions are using. And also the other benefit, most of the infrastructure and reporting systems are built around an ISIN, which has been around for 40 years. So by allowing the ISIN to transport these other standards, it means less effort, what Waqar spoke about, the integration challenges, to make that a bit more seamless.
And I think that hits the nail on the head in terms of a lot of the challenges that we've been talking about in this panel, the previous panel as well, around how critical standards are to promoting transparency and ultimately the institutionalization of digital assets. I think, having covered that, we're now at a point where the standards are being developed, which is fantastic, but there's perhaps a little bit of a leg into how industry is able to use that, coming from, at least from my perspective, one being awareness, but then the second also just being institutional appetite. So Waqar, if I can maybe turn to you and ask, well, on one hand, how can we as an industry mobilize and help drive that adoption? But from your perspective, what are the hurdles for, at least from a bank's perspective, at least trying to understand where the synergies are with your existing business model and how you can adopt them to push forward the digital asset product offering?
Yeah, so it's a very good question. I'll give you some context from a practical experience from my side, what we're doing right now. So as a custodian, we're going to launch our digital asset custodian very soon in the next few months. And as part of that exercise, as a custodian, we operate pretty much solely on ISINs and LEIs for infrastructure providers and MTFs. So when you have an asset that comes into a custodian, the primary systems that are built are around the identifier of the particular asset, like an ISIN. Now, if I don't have it, I have to reconstruct the world that I have for traditional markets into a separate data set. So we've had to engineer from the ground up infrastructure that can identify what the asset is, where it's linked to, how it gets transported from one point to the next. So all that information as a custodian, we have to build it. Now, if we have had an identifier or a bunch of identifiers in the market, I wouldn't have had to build all that layer because that would integrate straight into our traditional core custody platform. So I'll tell you the magnitude of difference. So crypto market today is about $1 trillion, give or take. The total custody market for traditional assets is between $230 trillion to $300 trillion, right? So talking about the transportability and linking between the $300 trillion market and $1 trillion crypto market is that identifier kickstart where some of those assets that are transportable between one layer to the next become acceptable by financial institutions like us, and to the degree that it needs to integrate into the traditional rails like the SWIFT system eventually and any of the payment networks that are on-chain or off-chain, we need to have these identifiers sitting there being able to incorporate that detail of what the asset is, which exchange is listed on, and from that point of view it's the LEI, which actually is the most important thing. And then, of course, the custodian that is actually currently holding it potentially and transporting it. So without that detailed information, it becomes very difficult to scale assets beyond that $1 trillion into that $300 trillion sphere that we actually operate in as a bank.
Thanks. And Denis and Stephan, maybe on the sort of supply side here, in terms of you developing the technology and looking at institutions like Standard Chartered and thinking we have the solution developing in our hands, how are you pushing forward sort of the message around the fact that you're creating fit-for-purpose standards for exactly what we've been talking about?
Well, these kind of events is obviously is one part of that. So we need to get that message out that the standard is there, that we have a DTI, we have a DTI in ISIN. We also have a number of we have a governance model in DTIF where we have a product advisory committee, and we welcome people to join it from across the industry and the world. The role for that committee is to advise us on the implementation of the standard. So things like we're looking around, let's say, how do we add taxonomy, for example, to the standard, or how do we want to add any other sort of fields that are on top of the existing standard? Because the standard is fairly small. It gives you a few fields that are important to identify the token, but then we can build on that and add some more elements that might be interesting to market participants.
So we touched on the education and awareness. I think that is fundamental to most everything. That's kind of the reason for events like this. People come to find out what's going on, become aware of things, understand, connect, I think that's the starting point. That's up to us to figure out how to do more of that and how to do that better in raising that awareness. So on the ISIN side, we've come from the point of we have something, it is fit for purpose in the traditional world. We've established it's fit for purpose in the tokenized version of that world, and where the gap for us was all these new kinds of things, right? The Bitcoins and stablecoins I mentioned before. Not really understanding, and I think it's the challenge that you hear in a lot of the regulatory debates is what they actually are. Are they commodities? Are they securities? So there was kind of a thought process there. How do we expand the scope of what ISIN does? Can we expand the scope of what ISIN does to these things? Are they relevant? Are they in scope for ISIN? And we did come to that conclusion, not necessarily because we said, okay, it could be an investable thing directly, but because it was very clear that it could be a reference for another financial instrument. So whether it's a structured product, an ETF or fund, and we've been hearing a lot about Bitcoin ETFs recently, kind of a new thing. And that's where it helps to kind of aggregate the exposure. But what we knew also is that the ISIN and the other information that related to it didn't necessarily help to identify or understand specific information related to the risks that the technology brings, so the DLT. And knowing that DTI was specifically built for that purpose, that's where we saw that kind of perfect marriage.
I'll just raise a quick point on that. I think the criticality of adoption will be based on what the regulator asks you to do, right? So if I go to a regulator and saying I'm going to tokenize and custodize and then distribute a token, they should be coming to us and saying, okay, you need to apply for an ISIN, for example, before you can do that, right? At the moment, I'm not sure that occurs, and that's where it should start.
Yeah.
But we see some of that. So in the recent MiCA consultation paper, they are proposing that DTI is used to identify tokens, but also to identify white papers. So as that regulation changes, I think it will come to that where regulators would say get a DTI or ISIN both, and then kind of that kicks off the process and kicks off the process of instrument creation.
They work in synergy together, and they lie really at the foundation of the institutionalization of digital assets, which I think is why a lot of us are here today. But I think there's one point here that I just want to touch on a little bit further from sort of custody or institutions perspective as a whole is, once this sort of becomes part of the bank's mainstream, how quickly is that going to help us, from a timeline perspective at least, or Standard Charter's perspective, build into the next steps? What is the timing looking like for you in being able to push this forward? You mentioned the custody offering that you'll be rolling out pretty soon, but what is the overall timing here that the audience might be able to expect?
I mean, for us, what's important is that when we do enter a market with our proposition, we meet the regulatory needs of that market and regulatory reporting requirements. So if our regulator says that, yes, you can report all the digital assets you hold on your wallets without an ISIN, then we will do as they say. If they say you need an ISIN so that we can identify really what this is, then we'll do ISINs, and that is an instant. That doesn't take time, because if it's a regulatory requirement, it becomes an imperative for us to meet those regulations. Now, we can't push that to the regulator. Of course, we can say, okay, we're adopting this, but they'll be like, yes, and what am I going to do with this? Because if they don't see a connect with what they do from a regulatory reporting point of view, market surveillance point of view, client protection point of view, as well as transparency point of view, individually as institutions like ourselves cannot push a standard. However, that said, that when we do start to look into tokenization of assets, we start to service large asset managers going forward, we can introduce the concept of how can we standardize the language if we were to move the asset from, say, Ethereum to another blockchain, or from another blockchain back to Ethereum, which is exactly the same asset but moves across different chains. Maybe there's an identifier that is needed to be able to do that, right? So for us, the speed is going to be with the market. We can't be running at a different speed in a vehicle, right? So the one wheel can't spin faster than the others, right? So we will work with the industry, but standards like this, when they come to the fore, do start the conversations with regulators, people who have regulatory obligations to report, and we will be there to service them. That's how we were looking at it.
And hopefully associations like GBC Digital Finance do a good role in sitting in between and pushing that dialogue forward. But I think since we have actually moved into the regulatory discussion a little bit, Stephan and Denis, if I could just maybe ask you from your perspective, what do you think are the pillars for engaging with regulators and really trying to drive awareness around the new standards that you're creating that can help the institutionalization of digital assets?
So that is something that we actually do quite proactively do. Probably a bit more focus in some of the more developed, more advanced countries that have kind of first mover regulation in the EU, Switzerland, and whatnot. I think there's a lot of work still to be done in other regions of the world, and I think we've all seen and heard about the big debates, which are probably more political than anything else on the U.S. side in the crypto space. So I think, when we look, for example, if we take EU, we've talked about, or in the previous panel, was talked about Mika, wherever you come from. The ESMA is very aware of the work that Anna does in terms of ISIN and also in terms of DTI, and we have that dialogue there. Things like the DLT pilot regime and the reporting requirements set out in the RTS2 kind of underscore the need for that. My advice, though, would be to organizations is you don't have to wait for the regulatory mandate to benefit from the implementation of standards. And if we look at traditional finance space, there are many jurisdictions which don't have the same stringent requirements of standard identifiers, but those jurisdictions and participants there are involved in cross-border trading. So in order to facilitate that, you need that common language. So there's a lot of benefits to be gained from implementation of standards. I touched on it before. Really helping to keep down costs in terms of data management, better transparency in the data, better quality of data, risk management, compliance, all of these processes that organizations have to go through, that fits in there because definitively that you are talking about something and you know what that is. You're able to identify it.
Thanks. Well, we are running up a little bit closer to the end of the session now, so I think if I can just wrap up with each of you and ask for a quick note to conclude, perhaps what do you wish for in the next year or 2 years to come, the next time we gather together at the European Blockchain Convention?
I think particularly for this panel, I think if I was to conclude my thoughts, I'm extremely glad that these standards are being built or they're being discussed. And we, of course, will bring these up with our clients when they do discuss with us about new products and services. For us, what's important is that when the coalition of the willing gets together to implement a standard, then it becomes industry norm. But amongst the coalition of the willing is the regulator and the client. If the client doesn't understand what ISIN brings to them at this stage, because they're completely focused on DLT and nothing else, then it's a difficult conversation. But if they are focused on DLT with that regulatory imperative and a national numbering agency, for example, that says any new security offering in the country, whether it's on-chain, off-chain, whether it's a private VC market, fund, etc., you need to have ISIN plus the digital token identifier attached to it so we can see exactly what this is, because those agencies would have to educate the local regulators. I mean, I'll give you an example of Abu Dhabi, where I used to be a regulator for a short period of time. I spent about 4 years there. One of the things that I mandated there was that any MTF that comes and gets licensed, they have to have an LEI, right? Without the LEI, they will not get a license. What that did was that streamlined so many operating procedures for us as a regulator, and some of the reporting they do now in Europe, right? It's very streamlined. No other regulator actually mandates an LEI or an MTF for crypto, right? So that's something to kickstart with. I mean, there are forward-looking regulators in smaller jurisdictions that we can start with. For us, we're happy to facilitate these conversations. We will try to adopt them as quickly as we can, but really looking forward to next year talking about how many we've adopted and how many we have actually listed on our systems.
I just wanted to kind of echo what Stefan was saying as well, that you don't need to wait to adopt these standards. And I think from what we see from regulators is that they love ISO standards. ISO standards are not kind of commercial product. There is no license fee. There's you don't have to buy a bunch of screens to use that identifier. It's not a vendor thing. ISO and DTI are free to use. You can download them from our website, from our website, and you can start using them already. And I think it is very likely that the regulators will use DTI and ISIN for the future for the crypto assets. I don't know how long it's going to take. Even with Mika, it's sort of confusing timeline with the transition period. But I think it is it's future. So you can start getting ready now.
Yeah, so I'd like to take it maybe to a different place. You asked a little bit about what we would like to see. I think that the timeline is very hard to define, and I would say I don't think it's important. Evolution takes time, right? It's a process. It's not you flip the switch and everything's going to be different tomorrow, and I don't think we need that. Things have to evolve at their own pace. I'm very happy to see that the topic of standards, albeit not a super sexy or exciting one, but it's a necessity, and that it is keeping up. We're able to keep it up now with kind of the technology conversation, with the regulatory conversation. So I would encourage people, to reach out. We want to understand what the needs are, what the use cases are, so that we can further evolve.
Not the sexiest topics that we need it. So maybe that's a tagline for the panel. On that note, thank you all very much for your insights. I hope that we can gather the next one to talk about all of the standards that have been adopted. And thank you to everybody here for joining.
Thank you.